Hello, this is Nathan, and welcome back to the Independence Money Show. This is another video in the series of If Your Money is Not Independent, How Independent Are You? I trust that you guys had a blessed Thanksgiving and spent a lot of good time with your families and got to eat to your heart's delight. So I got a lot to say today. We're going to reference a little bit of notes here and fly a little bit less by the hip, as sometimes is my protocol. And this video is titled, What Black Swan Event Will Correct or Crash the Markets? Notice I said markets, plural, big time. What is a black swan? Well, just like in nature, you don't see a black swan. You see other kinds of swans, but if you see a black swan, you're like, whoa, I wasn't expecting to see that. Literally, that's what that economic term means. It's something that nobody was expecting. And there is a series of answers to what black swan events could cripple the markets because there's so many there waiting in the wings. So let's just go right through them, all the way through real estate, the bond market, the stock market, and yes, the risks to the cryptocurrency market as well. So I know we've got a lot of crypto investors. Y'all listen up to this because there is some serious risks that market could follow the rest of the markets on its downward drops. Real estate market is slowing down. I've sold 2 more houses this quarter, 2 more rental properties. Lowest number in my portfolio currently. I'm holding the lowest number in my portfolio since, back in '08. My real estate agent says that the market is slowing down. The turnover of houses is less. The listing of houses is less. Definitely people are not overbidding. The last house I sold, I actually had to drop the price, I think 4 or 5 times. Now, they were micro drops just to kind of, bump the listing. But all in all, it's, we listed it for or sold it for about 10% less than what I started. That's how much the market has softened, even from August. So more on the real estate markets. I'm reading here, and I'll have a link because I don't know how to do what Amanda does where she flashes the web pages on it. So you'll have to look them up yourself. But I'll provide the links. But real estate market is slowing down. Foreclosures, in fact, or according to the latest report from Adam Data Solutions, foreclosure filings rose 24% between August and September alone. And over the year, filings are up a whopping 102%. This is partly in relation to the federal moratorium on evictions being lifted. So basic economics, supply versus demand. If you flood the market with supply, it's going to drop the prices, and we've yet to see how extreme that's going to be because these houses are going through foreclosure, but they've yet to be listed for sale. That is a scary thing on the residential real estate market, unless you are a first-time home buyer, and that might be a good thing for you. But that depends on where your money is kept while you're waiting to buy the real estate. So let's go into the debt markets. We are at a global all-time high in debt. Debt is through the roof. Collateralized mortgage-backed securities have a ton of risk involved in them. Unfunded government programs, they keep issuing new programs, but they don't have anything funding them. And corporations borrowing cheap money to buy back their own stocks. And this is before the contagion has even taken place with the Evergrande markets. And then you take it to the crypto markets. The borrowing without any qualifications or credit check is mind-numbing to me. I mean, you could get a huge loan off of Coinbase by depositing your crypto without a credit check or any kind of qualifications. So that is a risk, one risk that we're going to talk about to the crypto markets, and that is what happens when people are forced to sell because the prices have dropped and then their loans are being called. That's a margin call in the stock market world. That could cause automatic sell side traction in the crypto markets, forcing them down. Another major risk or black swan event, as I call it, to the crypto markets is Tether. The government doesn't have to take out Bitcoin. All it has to do is take out Tether, because Tether facilitates 70% of the trades on Bitcoin, and north of 80% in the whole crypto markets. And as you guys know, Tether is not only pegged to the US dollar, which they've printed, 40% higher supply, but Tether has minted more than that of its own coins, and it's not backed by anything. They were recently fined millions of dollars. So all the federal government has to do is say, Tether, you can't function without a license, or you're acting like a financial institution without having any backing of the actual currency, and shut them down. And that would send a tsunami of distress through the crypto markets, because that's where people go, the main stablecoin, when the rest of the cryptos look volatile. So here's a couple of things for you. One, don't trust the Fed. The Fed is part of the problem. So if you're listening on those, stock market channels about what the central bankers are saying, or what the Fed is saying, or the Treasury is saying, it is all fabricated narrative. And here's why. Inflation over the past year, 12 months change. I'm going to link you to this article from Zero Hedge. Beef, 24%. Bacon, breaks my heart, up 20% in costs, along with eggs at 12. Vehicles are up 26%, natural gas 28%, and gasoline 51%. Energy commodities are up over 50%. This is cataclysmic to everyday Americans that are just trying to heat their house, pay their bills, drive to work. It's cataclysmic on small business owners, trucking industry. This is probably the single-handed worst thing the government has done to our country, is let this inflation get out of control. So moving from there, I got a quote here from Stanley Druckenmiller on NBC's Squawk Box. Quote, "I can't find any period in history where monetary and fiscal policy were this out of step with economic circumstances. Market participants will continue to ignore risks until the Fed stop canceling market signals. The Federal Reserve is supposed to be the bank of last resort, and what it has become now is quite simply just propping up Wall Street and providing conjured money that is not facilitating the original job of serving the real economy." And that's the Fed. The Fed is also propping up the bond markets, buying $120 billion worth of bonds at $15 billion per month. So if the Fed's buying the market, and the Fed is buying the stock market and the bond market, I mean, that's what they're propping up right now. At some point, the market is not going to trust the Fed in a greater and greater scenario. So the last one I want to mention here is, what does the rest of the world think? This article here is impactful. Russia drops the US dollar. The end of the US dollar hegemony of the world is getting closer. The Russian Minister of Finance just declared the National Wellbeing Fund, its oil fund, will completely divest from its exposure to the US dollar, which amounts to $40 billion. Quote, "Today we have about 35% of NWF investments in dollars. We've decided to get out of dollar assets completely, replacing investments in dollars with an increase in euro and," here you go, wait for it, "gold." So all of these markets I've talked to have multiple counterparty risks to them, extreme risk, except for this one precious metal, gold, because it's a monetary currency. Silver is an investment or a commodity, and there's plenty of cases for silver going up, but gold is actually a monetary instrument here. And so here's the big concern that I see. Why? Why are these countries such as Russia, China, India, a whole list of others, I think 26 others, are abandoning the US dollar, about 40% of the world's GDP. And guess what? It's not because of the rampant inflation. It's not. That may surprise you. It's clearly not, because the rest of the world currencies aren't much better. Neither is the euro. Why are they dumping it? The systematic use of the US dollar as a weapon is why. Because when the United States controls the world's reserve currencies, More and more countries are no longer willing to accept this injustice. They're thinking of a way to get out of the dollar because that is how America has fluxed its dominion over the world. Beijing understands this, China understands this, and if they want to protect themselves from U.S. sanctions, us kicking them out of the world's economic playground, if you will, the best way to do that is to hedge their bets with gold. What's super scary about this is because if you caught what I said earlier, the National Wellbeing Fund is its oil fund. The only thing backing up dollars is the petrodollar, is because we forced the world to trade oil in dollars. The world is no longer doing that. There's nothing propping the dollar up. And the dollar, with all its printing from the Fed, is propping up the bond market, the stock market, and real estate market, and yes, cryptocurrency market. So that's some scary stuff out there. If I'm seeing this as a finance person and others are seeing this as investors, wait till everybody else wakes up and flees towards these assets like gold and silver. You won't be able to get them anymore. That is, I think, the one safe place to hide right now. So thanks for bearing with a little bit longer video. I got a lot of content on this one. Feel free to subscribe. Please ring the bell, because we are going to be firing out a lot more education-based content. My marketing person is coming on board on Monday, and you're going to see this channel really explode with some additional how to protect yourself type content. Until next time, this is Nathan with the Independence Money Show.